It was on a Thursday 10 years ago today that the city of Detroit filed for Chapter 9 municipal bankruptcy. It had taken on too much debt that it could not pay back. A decade later, Detroit is more financially stable, but as business editor Rod Maloney shows us, being seen right now by investors as a city on the rise. Rod?
Yes, a decade after the bankruptcy, the city of Detroit still has a need to knock down a lot of the vacant homes that it had. But right after the bankruptcy, no one was going to be buying the municipal bonds that the city needed to raise that money. But a decade later, things have improved rather smartly. Back in 2020, Detroit city voters approved Proposal N, permission to solicit $250 million to knock down the city's still plentiful, abandoned, blighted, and broken down housing stock. And something encouraging happened on the way to the bond market.
Well, there was just loads of interest.
Detroit's chief financial officer, Jay Rising, saying the city's vastly improved finances created a bidding frenzy in an effort to raise $100 million for not only demolition, but transportation and recreation, too.
Well, there's a lot of interest in us. We're an ascending city, so we're on sale. So there's an opportunity for folks to come in and get a little better return.
Ancora investment analyst David Sowerby agreed.
The bond offering was meaningfully, significantly oversubscribed with demand.
Especially compared to a similar bond sale for the city of Philadelphia yesterday.
The demand for Detroit was stronger, hence the lower cost of borrowing and lower interest rate. And I think that ratifies Detroit moving in the right direction.
It's a win-win, better return for investors and lower cost for the city.
This has been 10 years of success. We're not done. The fact that these bonds were made, where $75 million is going into reduced blight, shows you we're not done. And we're committed to finishing the job.
Now, the city isn't at investment grade just yet. It's just below that. But the ratings agencies believe that the city has a chance to improve on that, although they're staying kind of in the middle, knowing that because we're dependent on the auto industry, things could go south pretty quickly, too. But as things stand right now, they've got some money to do more of this. In Detroit, Rod Maloney, Local 4.